So I'm convinced that the Motley Fool spends more time on Reddit than anybody else these days, because every article that they post every day has something negative to say about Reddit users, about retail investors, and about the most recent trends on Wall Street Bets or any other subreddit group for that matter. So in this video, we're going to go over an article about the 7 reasons to avoid the Reddit stocks like the plague, and why this is just a little bit bizarre. Alright, now if this sounds like something you're interested in, let's get started. What's up everybody, I'm Clay. We're going to make 2021 the best year ever. We're going to grow our portfolios together, and we're just going to grow together. If the subscribe button is still red, make sure to subscribe to the channel and become a bro. Alright, so let's just jump right into this article. Reason number 1 is that all of these Reddit stocks, they've detached themselves from their underlying fundamentals. Well, I can think of a couple stocks that have detached themselves from their underlying fundamentals because of a short squeeze. I mean, come on, GameStop, AMC, what are you talking about? They've detached themselves from their underlying fundamentals. When a stock has over 100% short interest on it, I believe that's already detached from fundamentals, right? If somebody's gone out and shorted over 100% of the float, yeah, you're looking at a pretty risky situation. So let's blame it on the hedge funds, not on Reddit. Reddit called it out for what it was, and this is turning into the biggest short squeeze in history. So yeah, they were detached from fundamentals well before Reddit got involved, and well before all of the news outlets and media started reporting that stocks were rising because of this one group on Reddit, right? So yeah, GameStop is trading well above its underlying fundamentals or its book value. AMC stock is possibly trading above its fundamentals, but AMC has a great future ahead of it. I mean, we're looking at having all of the theaters, or 98% of the theaters in the United States, opened by tomorrow. I mean, so there's a lot of huge potential ahead for AMC to start increasing revenue, to get back on its feet, and it's not worried about bankruptcy because it's got enough cash on hand to last at least a year, and the pandemic is going to be well on its way out by then. People are going to be getting back to normal, and things are looking bright for AMC stock. So yeah, okay, they're detached from their underlying fundamentals. One more point on that one. I watched a video yesterday. It was like back in late 90s or early 2000s. It was investors on Wall Street. Some of them were saying that it's crazy that Amazon is trading at a higher valuation than Sears, and this is, out of lines. Amazon shouldn't be trading so high. I'm like, guys, come on. I mean, Amazon is the biggest company in the world, and people are always going to hate on it, okay? Especially people in power and people up top. They're always going to hate on innovation, and they're always going to hate on valuations and companies that are making a difference in the world. So yeah, think about that one for a minute. They're often serial diluters. Okay, we've seen this with stocks like Sundial. They issued a lot of shares, but I believe it was a good thing for Sundial because they were able to, 1, erase their debt. 2, they're sitting on like $700 million in cash, ready to really take advantage of some amazing merger and acquisition opportunities. And once the US market opens up, they're going to be able to take advantage of that opportunity because they were able to raise more funds. So yes, it's always possible that a company is going to offer more shares, dilute current shareholders, but if it helps the company in the long run, if it's something that they vote on, they believe that the company is going to grow because of it, that vote takes place. And the leaders of the business, they decide that it's the best thing for the business. So, all right, dilution happens. Number 3, they usually lose money. What company these days makes money? I don't know. Unless you're talking about a company that's been around for 30 or 40 years and is well saturated in the market. If you're talking about brand new companies in brand new industries, they need to grow. And yes, they do have negative bottom lines, but it doesn't mean that they're not positioning themselves to be profitable in the future. Now, a lot of people, yes, they like to focus on companies that only have a strong bottom line, that are only profitable at the end of the year. And that's okay. But it doesn't mean that it's not something you can invest in if they have a negative net profit. Number 4, some of them lack innovation. So let's talk about Riot and Mara for a second. They're not exclusive to Reddit or subreddits and they've been around a long time before this whole, squeeze started taking place on Reddit. And innovation or not, man, if you go from 50 cents a share all the way up to $70 per share, I mean, I like that gain. I don't know who's going to care too much about innovation. They very well follow the price of Bitcoin and the price of cryptocurrency. When Bitcoin goes up, those stocks go up as well because they're involved in that blockchain. So, okay. Quite a few are penny stocks. Okay. Avoid those if you don't like penny stocks, I guess. Some may not survive. What company is not subject to going out of business or not subject to bankruptcy? Any company out there could go bankrupt. Too big to fail thing? I mean, what do you got to do? You got to get on the government side, I guess, if you don't want to run that risk of not surviving. Then the government owns you. So margin use is a concern. Everybody's always concerned about people trading options because options are risky and blah, blah, blah. Look, options can be used for a couple different reasons. Yes, you can use them to increase your margin if you want to just buy calls or if you only want to sell puts, whatever the deal is. But options can also be an excellent way to mitigate risk, to hedge your positions, and really buy yourself insurance if you're unsure of which direction a stock is going to go. So a lot of people talk bad about options, but they don't necessarily need to be talked bad about. If you understand how to use options, they can be an excellent addition to your arsenal and really help you make some money along the way. Now, guys, I know this one was a little bit quick and we were talking not really about too many specific stocks in this video, but these are the 7 reasons that the Motley Fool thinks that you should avoid Reddit stocks like the plague. And if you want to make some money, make sure to subscribe to the channel. We talk about all kinds of stocks on here. You're going to see the latest and greatest, what's happening in the news, what everybody's investing in, and really what's going on here. So make sure to hit the subscribe button if you haven't already. If it's still red, subscribe to the channel, become a bro. If you're brand new to investing, there's a link in the description below for Webull. It is super simple to set up your account, and you're going to get a couple free stocks just for doing so and depositing $100. And make sure you do that before, like the last video I posted where it says, that commission-free trading could be on the way out. So make sure to subscribe to that or sign up for that Webull account before they start changing everything and really messing things up in the investment world. So until the next time, guys, I hope that each and every one of you have an awesome day.